In this video, I'm going to take you through the basics of probably the best supply and demand strategy on the internet. How do I know that? Because I made it. Something that a lot of people don't seem to realize is that the market just moves zone to zone, and I'm going to demonstrate on the charts exactly what I mean. If we have a starting point in the middle, we're going to have a target area above and a target area below. So if we're thinking that price is somewhere around here, essentially what we need to do is break out of our area, come back, retest, usually an order block or an area of demand, and then work our way up to the next area. Or what it could do is be playing around in this current zone where it is, break out of this area, come back, retest, and then head down the next area. And then all what it does is repeat. It's pretty much as simple as that. Okay, so it could work its way down, break out of there, not come back, and just go straight down to the next one. And these areas are quite easy and simple to spot on the charts, and we'll jump over to the charts in a second. But firstly, let's just look at the entry models, okay? So there's only two entry models which really I look at, and there's variations of the two that you could do. First of all, I've gone into this one in a fair bit of detail on the mathematically unbeatable video, which I'll tag somewhere above. But there is literally the pullback, which is this, okay? The pullback is otherwise known as the continuation, and the reason for that is that you'll get a break of structure of a particular area, so this will be BOS, and once you've had BOS, you've got about a 65% chance that it's going to come back, retest something within this previous leg, okay? So this leg, there to there, before it grabs on and it goes again and creates a new BOS. So you've got about a 2/3 chance of that happening. So that's a continuation trade. So how do you trade that within one of these areas? Okay, so let's just go back to these three zones, all right? Because you've typically got where you're starting from and one above and one below, okay? It's really simple. It's a little bit like support and resistance trading. Let's just say, for argument's sake, that we are starting off from here and we work our way up to here. Do we automatically short the market just because we've reached an area? No. What we need to do is we need to wait for price to break out one side or the other, and that will determine what type of trade we're looking to do. We are reactive to the market but using a proactive mindset because we already know where the key areas are which the market is likely going to try and lead towards. It's a little bit like a magnet, if you can imagine it like that. So what we're expecting, or what we're waiting for, is the market to show its hand. In this case, we are breaking out of the zone, we're pulling back, we're going again, it looks like we're going to break upwards, we've already had BOS, we're going to wait for price to come back, get a deeper entry if we can, and target up there, okay? It's really as simple as that. So that's for a continuation trade. Now, what about a reversal, okay? Reversals are massive, or, you know, hugely popular within the SMC market, and I fully get it because I trade reversals too. Reversals essentially help you get in at the very start of a trend, okay? So a reversal pattern, a very standard one, is known as CHOCH. It's a change of character. All right, so what you got is market moving up, pulls back, pushes up again, so you get BOS, but then the change of character comes in. It's really a change of direction. I don't know why they call it a change of character because it doesn't make sense until you've got the confirmation. But for you to get a change of character, you need to get a break of the previous low, okay? So the current leg which you're on, you need to get a break, and preferably a body break, just to show that you've got momentum going in your favor. Then what you're doing, instead of trying to get long again, you're just waiting for price to come back up with this leg up there as deep as you can, or as far as it seems viable based on the candlestick patterns, because bear in mind we're just looking at straight lines here and the market is never just straight lines, but we're looking to get involved with a deep order block if we can and work our way down. First target is always just this new break of structure, so first target is there, and next target is going to be the next area of supply or demand. In this case it would be an area of demand. What we've got here is just our little example. Price breaks out, we get our continuation trade pattern where it's just a pullback. We get up into this next area, hopefully you take a bit of profit from that previous zone. Then price presses down a little bit. It can look as though we're just about to reverse. Great, price presses up. It could end up being a wick just breaking out of that area. Price then works its way down. Doesn't have to be direct, you know, it could be something like this, but you need to end up getting a break of structure because this little move here is internal structure. Another thing for another video, a little bit more complicated. I guess, but it's the same stuff. So price is coming back in, we get involved with either that order block or we get involved with the extreme if we can, and then we go down, we get a break of this structure, work our way up, work our way down, get into this bit, great, price comes down. Hopefully we'll take a little bit of profit. Price passes through again, so we're now just switching our bias and saying, right, okay, we are going down. We're just gonna wait now for a pullback. So we're looking for a continuation trade and feed it down to the next area. Why? Because we broke out of this zone, we got the reversal pattern which we wanted, and we're just going zone to zone. So our initial targets are always gonna be BOS and CHOCH, and that's just to give us that little bit of confidence in the direction of the trade. But in reality, the market is always leading towards these, you could just call them magnets. It's literally just like a magnet. So I'm gonna show you on one of my charts. I'm gonna use one which is not a live chart, so it's not filled with loads of stuff. And we're just gonna see how it looks. It's really simple, really simplistic. Does it work every time? No, but generally speaking, it's got a very high probability of you going from one zone to the next zone. And if you can figure out where to get involved in the market, you are always going to be quids in, okay? So one extra thing that I wanted to add in is that your trading only revolves around when you get to one of these key areas, okay? Let's just say that the market, let's clear this out of the way. Okay, so one of the rules which I've got, which I break really regularly, but if I want to be a multi-millionaire trader, I've got to stick to this and be a little bit more disciplined. This area here is called the range. Don't trade it. All right, don't trade it. You will get chopped up. There's a lot of counter trend trades. There's a lot of uncertainty. Just try not to trade it. Instead, what you should do is just wait for price to reach one of these areas. And that means sitting on your hands for ages. It's really boring. And that's the thing with trading. It is boring. It is a job at the end of the day, okay? I don't know how to word it any differently, but it is really boring. So all what I do is I set alerts, all right? So I'll just set alerts near to where these targets are, and that's it. So if the alert goes off, usually these zones are gonna be a higher time frame to the entry model which I'm trying to take part in. So let's say, for example, this is an H4 zone, this is an H4 zone, this is an H4 zone. This is gonna be the 15-minute, okay? So 15-minute is where I wanna try and get my entry on, because if I just try to take a trade off of, H4 to H4, you might get a 1 to, in this case, 1 to 3. But if I can get an entry off of an M15, it might be something a little bit better like this, like 1 to 10, 1 to 15, something like that. But you've just got to have the discipline to be able to hold the trade. Once you're involved from somewhere within a previous zone, your next target really is the next zone. So let's jump into the charts and see what I mean, okay? So we're gonna mark out all the key areas which look like supply and demand zones. Now, supply and demand, to make it really simple, is just an area where the market has a huge exchange of power. So when there's too much supply and there's not enough demand, the market will drop. When there's too much demand and not enough supply, the market will go up. In this case, we just see like supply everywhere pretty much. But I'm just gonna mark out some key areas, okay? So there's one here. Now that was just quick and dirty, just to demonstrate a little bit about how your charts will look. Okay, so identifying areas of key supply and demand is just basically going to be picking the tops and the bottoms of a range, especially when you've had BOS and CHOCH in play. So if you look at the areas of supply over here, there's a few more areas where trades would have played out, okay? Look at the top parts, or the top half, so top half of this channel, so basically this side of the market. You'll see that if you got involved in this one, you would have taken some profit. If you got involved with that one, you would have lost out. With this one, it's still open. With this one, it's still open. With this one, it would have worked. With this one, you'd have taken some profit. But if you look at the areas of demand, the lost areas, the places where people just think, oh, okay, well, there's demand, we're going to bounce off of there. You can't ever take that assumption, because look, loss, 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 all losses. And that shows the importance of identifying trend direction. Now, if you want to see trend direction, I'll tag another video just to save a little bit of explanation, but it's essentially BOS and CHOCH. Pay attention to it. If you want to look at key areas of support and resistance, which can help with this strategy, essentially all what I'm going to do now is I'm just going to mark them out on a chart. I'm going to clear this off, mark it out, so you can start to make a little bit more sense of it. So as you can see, I've just put them in green for you to be able to see whereabouts they are on the charts. These are the key areas where price carries on testing and retesting and running away from and then leading back to. But essentially, if you were to trade just outside of these zones, okay, again, this is really simple because it's just drawn on a chart which we can already see what the result is, okay? But you can identify where these places are, and I'm going to go through how I mark up my charts, and I'll literally go from top down to lower time frame so you can see exactly what I'm looking at right now. And you can see, hopefully, in a couple of months' time, which ones work out and which ones don't. Look at the green area, okay? Price breaks out of here, it comes down to the next one. Did that come from anything in the past? Kind of. What happens next? Comes up, works its way up, gets back to the green area, okay? What did we have to get with that? We did have to get CHOCH, which occurred right there. Price came down, tagged off of something, worked its way up. Price came down, we got the breakout, it was only with a wick. Once we get the body, great, we can start identifying these areas. This, this order block / supply area gets tagged, price comes down, take profit in the next green area, price works its way up, we get CHOCH, price goes up, back into the next green area, or the previous green area. Price then breaks down with a body, works its way to the next one, works its way through, goes down to the next one, we bounce back, come back to the previous one, and so on and so forth. It is literally just that simple. So all what you're going to be doing on a lower time frame is trying to identify using those continuation and reversal patterns. If you want to go into a little bit more detail with this, it will change your statistics a little bit. It will change your actual live trading psychology based on whether or not you get wick breaks or if you get body breaks. What I try to get when I'm identifying a particular area of supply and demand is essentially a body break, because that shows you a little bit of momentum going in a particular direction. So let me just draw up my current charts. Okay, I'm going to try to time lapse this, but you should see exactly how I'm marking them out using higher time frames, because all what we're doing is we're bouncing between time frames. The daily respects the daily, the weekly, monthly, so on and so forth. The 4 hour respects the daily, the weekly. The 15 minute respects the 15 minute and the 4 hour. The 1 minute respects the 1 minute and the 15 minute. You don't really want to be trading between 3 time frames, okay? You should have 3 time frames on your chart, but you shouldn't be taking a 1 minute trade expecting the daily to respect that. You shouldn't be looking at little 1 minutes here, there, and everywhere when it looks like nothing on the daily, because the daily is just going to tear straight through it. You should be looking at pretty much the 15-minute order blocks or the 15-minute areas of supply and demand to try to get one of these 2 patterns on the 1 minute. Let's jump through to what my charts will look like right now. So starting off with the daily, let's look at where the key areas of supply and demand are, and also to identify the current trend direction. What we can see is that the daily has been identified as going up, and the reason for that is we have had our initial CHOCH in this area. Okay, so that was the CHOCH just changing our direction. So let me just mark that up. So daily CHOCH. Did it happen out of a key area? Well, on the daily, it doesn't seem to look like. Maybe we had a little bit of reaction over here, but if we go up to the time frame which the daily respects, which is the weekly, we should see, hopefully, that we've had some kind of reaction. Not really. So we have had a turn in the market. It seems a little bit out of place, but that's absolutely fine because we're not looking to try to take trades off of the daily. We're just trying to use it as a confluence. Okay, so at the moment, the daily is up. Now, what do we have in our favor with the daily? We have an imbalance just above the daily, I'm going to call it an order block. It's a load of blocked orders down here. It has swept liquidity. It's mitigated this last sort of move down here. We've got that imbalance. We have just rebalanced with that candle, but there's still this candle's imbalance to go. So effectively, what we could see, just as a probability, is price come down, tap into this area, and work our way up to at least here. Okay, we need to get that break of structure first, which is great, but essentially I really want to be trying to take a trade if I can off the discount zone. All right, so premium discount, I tend to drop discount more than anything, or premium discount, I tend to drop it out of my trading more than anything. Obviously this is the discount zone because it's discounted, it's cheaper price. We could either get that, or we could get price not come down at all, continues up, possibly just a little reaction off of here. Yes, it's a support resistance zone. Price come back down, probably tap into this area which we've just generated, and then work our way up to the next one because this one will already have been used up. It's following the trend. Okay, so we'd get break of structure there, price go up, get the liquidity that it needs, come down, get the liquidity that it needs for that, and work its way up into this area where we'll decide what to do when we get there. And I've also just drawn out the other ones, so I know sometimes weeks or months in advance where the key areas are which we're going to struggle at. So let's move on to the H4. Okay, so the H4 being pretty much done, what I've done is I've marked out the green area, which is essentially supply and demand area, okay? It's just consolidation. It looked like it had been fully mitigated over here. So this area, in my eyes, should have been run. Generally speaking, that's what normally happens. You had mitigation of at least the halfway point of this key area. We should just break up. So the target was essentially for the H4 for us to go up and tap this daily. We haven't done just yet. So I think that the market is looking as though on the H4 that the market is probably going to come down, grab this liquidity down here and work our way up to this zone. So really on the M15, I'm really invested in this area. What I should do right here is I will set my alert, because that just essentially, it will tag my watch, it will tag my phone, and it will basically say get to the charts within the next sort of 15 minutes, 45 minutes, because you want to see whether or not you're going to get the reversal pattern happen within here. What else do we have? We've got a huge imbalance right now. You know, it might not be there in the next hour or so. That is just a bit of an incentive for the market to come down, preferably just a bit of a zigzag move to show that the market's not really got too much strength behind it. But I'll still take a trade if I can, if the market comes down and presses with quite a bit of aggression. We had CHOCH occur up here within this key kind of area, so that gave me confirmation that once we'd had the body break of this, we were looking for potential shorts, because the daily, still just respecting the higher time frame, the daily was still pushing up. So the daily is looking to, you know, it's done that. It's looking to possibly come down, grab the liquidity that it needs before it presses up to the next dailies. We almost reached it, we didn't just yet. This is usually just an incentive, essentially, where we've just got liquidity sat above here, which is being created just to try and push us up to that little bit further. So we might just end up getting a bit of a wick and then a pullback, and then we'll decide from there what we're gonna do. So let's go again and see what else we've marked up. Okay, so we've got an H4 above within here. It's a little bit more standout, but it is slightly outside of the D1 zone. Again, with this one up here, it looks a little bit messy. Don't want to go into detail on this video, but I don't like the look of that one, or this one to be fair. But this one, fairly decent, and this one down here. But I did draw out another H4. Just happens to be bigger than the daily, which is a bit unusual. So the H4 over here is essentially the black candle. Problem is that it has been rebalanced. Now, one of the things that I like to see with my order blocks, for example, is I like to see an imbalance, but I don't like to see an imbalance beyond it. But what we have done is we've kind of rebalanced / mitigated this area here. So this might work out, it might not work out, but again, it doesn't matter. I'm not placing pending orders off the H4. You can do, but it's a little bit risky. The only time where you would place a pending order off an H4 is if you're getting action within a weekly order block. Okay, so there are ways to be able to play this style of trading, whether you are swing trading or scalping. The rules are respected universally, but you just gotta know which timeframes respect which timeframes. And a lot of that just comes from back testing. I'm currently back testing the 5 minute and the 1 hour. That gives, again, just a little bit more variation if I have a session to trade. So if I could trade between sort of 8 AM and 12 PM, then I might be able to do the 1 hour and the 5 minute, rather than the 1 minute and the 15 minute, which I currently do a lot of. We have this area and we've got the next time frame, which is a daily. So really we've got to respect, if we could get involved on the 15 minute on here, we're going to be taking our profit up there. Or if it breaks through, we're going to be taking our profit down here, but respect the higher time frame first if you can. A decent risk reward ratio either way. Now let's just drop down to the 15 minute and see if we can find anything which is a little bit cleaner for us. Now, something that I forgot to do on the last one is just mark up what direction I think that H4 is going, and I think that H4 is going up, okay? And the reason for that is we ended up getting CHOCH right here, and it was closed with a body just above it. That is H4 CHOCH. That gives me the feeling that the market might just work down, fill in this imbalance, possibly get a tag off this 15, which we've identified, you know, at least go up past this area. Okay, so if this is going to be the high, then we want to try and get initially a move beyond that. Price will probably come back down, work our way up, get past this main sort of structure, which is a daily, come down, grab more liquidity, and then work our way up to the daily. Might happen like that, might not, who knows, but we might get more opportunities to get in at the extreme. Okay, so you just got to be patient. So with the 15, I only identified a couple of areas which I was quite comfortable with, and this one is one of them. Okay, so somebody called out on the Discord group in FTR, link below by the way, this trade a little bit earlier. So they asked me, what do I think about this? And I said, yeah, okay, it looks good. You know, this is the area which I think that there should be a trade from. And I actually identified that the 5 minute is a little bit cleaner. Okay, so I think I identified this little drop down as a little bit cleaner, but I didn't want to show off and say there was actually a better entry on the 1 minute. Now the 1 minute with this was down here. For some some reason, this would have been the perfect entry right there. Go off the 0.25 as your entry, and you would target the next level, right? So this, give yourself half a pip buffer. Initial target is going to be this swing, so the 15-minute, well, 7.5 hour. You want to try and go up and get the 4-hour swing, which is great. That's 20, which could have been done in the space of like, I don't know, 2 hours earlier on today. And then realistically, because this looks like it might be the turnaround, one of the confluences which we have is it was a rebalance on the H4 or daily. So the target from this one really should not just be the break of the daily high, which is already looking at a 43.5, but it should be the daily zone, which is up there, which is 50R. Okay, so if I'd have placed a trade, which I was looking at, could be pretty cool, but we'll come back in a week's time or so, or possibly whenever this video is posted, and see if it worked out. Don't expect it to, because it's, well, it's a 50R trade. It might not work, but if it does, proof. Okay, superb. Well, the 15-minute, just coming back to that really quickly, we've got one down here, which is okay. There's a tiny bit of imbalance just above the imbalances between that wick and the top of that black wick. So essentially, there's just a little bit of an incentive for price just to pop down. It might just be a tap and go, so it could be an entry off the 0.0 rather than off the 0.25. We do have different entry criteria for how risk averse you are and how much risk reward ratio you want to get out of the market. And then coming up to here, I could only really identify one area, which even still, you know, to me, doesn't look fantastic, but it was right here. This has already been mitigated, so it's high risk, but it's just going from above the highs of this, covering this. And the reason why this one is mentioned is that it's swept liquidity and it's mitigated a previous order block. Not fantastic. What I might need to do, because I'm not comfortable taking a risk entry off of this, is that I might wait just to see somewhere within this H4 or daily chop to occur and then feed back down. That might not happen. We might end up just, you know, clearing through this area. Therefore, I'd want to try and get involved on a previous pullback and work up to the next area. So what I do is purely market dependent. At the moment, I've got everything in my favor. Okay, I've got the daily heading up, I've got the H4 going up. So really what I want to do is just be patient and wait and add my alert just above that area, because if prices press down with a lot of aggression, might scare me out in the market. So if we zigzag down a little bit, like, you know, this doesn't show you too much momentum, price to just tap off of this area and then go. So, you know, we could always do that. Additionally, there's another way of trading which nobody seems to know about on YouTube. Because it's full of bullshitters who just like to do pending orders all over the place. And trust me, that is the most... What you could do is you could set your alert literally just on this key area. Okay, so let's just say that we set our alert right there, and then we look at the chart and price has come down currently there. Now, what you could do is the style of trading, which I quite often do if I'm looking at the chart when I'm within a key point of interest, and use a stop order. And the stop order is literally just, it's so protective. It just means that if price decides to come back up and through, it means that you're trading with the momentum. You get tagged into the trade on its return back. Okay, it's quite difficult to do sometimes if it's just a stabby move, but sometimes you miss them. But in reality, you're not going to be taking the series of losses, because if the market decides to go like that, you don't get tagged in, so therefore you don't get a -1. So there's just a little tip for you on how to better your trade results. So when you're going through and back testing, just a little tip to you, don't worry about, you know, just taking losses on all the areas, because if you can be at the chart at the particular time where the alert would go off, just use a stop order, because it's going to stop you from getting a loss, but you might get a win from it. So great. Anyway, really simple. I've gone into a fair bit of detail on this. I've talked quite a lot. Go and do some back testing. Any comments that you've got, stick them in the comments section and I will do my best to answer you. If you love this type of content, feel free to subscribe. And if you want to join us, the link is in the box below. It's FTR Trading. Enjoy.